Hey, welcome. Come on in. Does that work or
Should be fine.
do the wrong ones?
Whatever you're comfortable with.
Well, I'd really like to have. Okay. Are you guys good if we just leave the lights on? I just want you to be able to see. So are you guys here for more of like a demo experience, or are you here to get the mysteries busted? Just so I can make sure that I address them. Yes.
So boring.
Okay, so you're looking for ways to make this more adventurous and exciting.
Yes.
Got it. Okay.
I just got a ton of questions about credit, and I mean, I know from my own personal experience, I just.
Yeah.
For knowledge.
How do I address this?
Yeah.
For
yeah.
sure.
They're very, at least my students are very like, oh, tell me more, and I'm like, okay, I gotta do a little bit more.
Yeah,
You know?
little iffy. Yeah.
My
Okay.
background on that.
No, that's perfect. When the more I understand, the better and more effective I can be for you guys. So, there were 2 other credit presentations. Did any of you attend those today? Okay. I was wondering if there was a reason why you picked this one, because I was like, why are we doing 3 credit presentations in one day? Not from us. Other groups had delivered them, which is fine. But I was like, was there something that stuck out?
I think I just was like, oh, this one will fit into.
It will fit into the schedule.
To grab.
Yeah. So I heard there was a fraud prevention or a scams avoidance class. What else have you guys learned about today? You didn't know I was gonna come and have a whole conversation, huh? Ooh, what did they do with Bonsai? Did they just demo the system?
They just talked about kind of like making things more interactive.
Cool.
There's a better. I remember looking up the stock market game a couple years ago, and I didn't like it. And apparently, it's better now. It's called. You guys go to one of those? The Investment Challenge. It's still from the
Okay.
Treasurer's office,
Yeah,
but it seems a lot more user friendly than it was. So.
that's awesome.
In replace of the stock market game, or it
Yeah.
also they both still exist, you know?
I don't know if the stock market game is being offered by the state of Utah. Did you use that before?
I tried it once and it was
Yeah, it seemed
a little,
I remember logins for the kids were a little annoying.
yeah, it was.
But I can't remember if I went all the way through it or if I tried something else. I can't remember the specifics. But I know now, the one I just attended this morning, it seems fairly user-friendly. And apparently, this will be the second year. They did it last year.
Okay, it's
And
called
so-
the investment challenge.
Yeah, it's still from the Utah, maybe I'll find it right now. The Office of the Treasury. But yeah, one of my beefs with it is you have to do it on their days.
Okay.
So it's from September something until November something. I kind of wish I could pick the start and end time. And they said I could, but it would be separate from their game.
Yeah, have some more flexibility. Well, and when you guys teach, I know it's only a semester, so your semester timing is a little bit different, right? So,
60 days.
only a trimester? Oh, wow. Okay, I didn't realize it was so short.
Well, I'm in Cache Valley where most of those schools are trimesters.
Oh, okay. So it just looks a little bit different.
So we crammed a lot of information.
A lot of content.
Yeah.
Wow, that sounds like so when we do our presentations, we go out into businesses as well as rehabilitation facilities. And we will say, hey, let us come in, once a month for the next 6 months. So we'll do a presentation, we'll give them some ideas on how they can implement it, maybe sit down and have a one-on-one financial coaching session with us. And then okay, we could go on to the next topic. And sometimes it doesn't quite work like that. Sometimes it's we come in 1 month and then we come in the next month, but it takes time. So to try and mash all of this information into just you said 60 days,
Yeah, that's
Whew.
my school.
and that sounds kind of rough, but good for you for being able to take on the challenge and do it.
Sometimes I feel like it's a whiplash effect, but.
I bet. Yeah. Well, those kids can only take in so much, right? And I think one of the best things we can do is just expose them to the ideas. And the more they hear it, the more familiar it's going to become. And as they get more experience, that's when the relevance really sets in. Oh, somebody told me about this. Yeah. We're at 1:32, and I'm not sure if we are waiting on anybody to get started. We had a facilitator in here, and I just want to maybe give it another minute for him to come back. And if we're good, then we will get started.
Didn't he kinda go
Hello, come on
through
in.
all the rooms, so he kind of
Oh, he bounces back and forth? Okay. Well, maybe then we'll just get going because I want to be respectful of your time as well. Do you please remind me, do we have a full hour in here?
Till 2:20, it looks like.
Woo, okay, we gotta get going then. All right, so I'll just do a quick introduction. My name is Cassandra Fuentes. I work with Mountain America Credit Union. I've been with the credit union for 5 years next month. It's hard to believe that it's gone that fast. My role is on the financial education team, so my job involves going out to different places within the community. That could be a school, it could be a university, it could be, like I said, some nonprofit organizations that we partner with. We partner with for-profit businesses as well. And we really focus on financial wellness. We know you all do an incredible job in the classrooms, and we're just here to kind of offer some help if that's something that would be beneficial to your students. You guys know them best, and so wanted to just make sure that you're aware of that. Credit Myths Busted is what we're going to be doing today, but we have a ton of different presentations, so you can actually learn more about those by going to macu.com/workshops. That's where you could go to learn more about those. You can fill out a form. We're also doing an entry. You can enter to win a $100 giveaway over at our table. So if you haven't stopped by yet to scan the QR code, go ahead and do that as well. But let's get into this. So I'm going to kind of do really just a demonstration of this Credit Myths presentation as I would for, a junior high school audience. And then as you have questions, you're also here to learn. And so if you have questions, please feel free to, jump in and ask those. So our purpose today really is to help understand what is a credit score, why is it important, how do I read a credit report? Because that's something that a lot of students, they hear credit report, but they don't exactly know what that means or how to make sense of it. Let me make sure my clicker is working here. It helps if you don't jump the gun and you actually plug in the thing. I got too excited, you guys, so forgive me. This is what we're going on. Okay, so we'll cover just some credit basics, information about the credit score. We'll also talk about the components of a credit report and how to read that. We will talk about some credit risks, how to maintain and restore your credit, and then your rights as a consumer. If I were doing this in a high school class, I would probably alter this a bit depending on the student's level. So, the older they are, the more relevant this becomes. But if we're just doing kind of an introduction, I would really go through credit basics, understanding what a credit report is, and maybe jump into the credit risks or your rights as a consumer. So this is the cool thing about Mountain America is we can alter these presentations to help fit your needs of your classroom. So starting first with credit basics. Now in this section, we're really focusing on what is a credit score, why is it helpful? And for learners, it's helpful for them to understand this because this is where a lot of the questions come from, right? Is 740 a good credit score? We want to be able to have them know, yeah, that's within the good credit score range. Here's what I can do to improve. So here's what this looks like. So what is a credit score? Well, there's actually some really interesting history on the credit score. FICO, or Fair Isaac Corporation, started back in the early 60s creating a score based on some math to determine whether or not they should do business with other businesses. And as time went on, they like, whoa, this might work for lending and continue to make those business decisions. So you can see the first credit score was recorded in 1989. But actually, mortgage companies started to adopt that as a way of decisioning loan applications in 1991. So there's your fun trivia for the day, in case that's your jam. One thing I want to point out is FICO is just one of the credit scores. It's like the Kleenex of tissue or the Band-Aid of Band-Aids, okay? There are more brands than just FICO. And one of them is the Vantage score. The Vantage score is actually newer, like much newer. They started in the early 2000s, and it's the 3 credit bureaus working together to create a score. Another thing to note is that proprietary credit scores, there's tons of them. Okay, every one of them has a different purpose. They get their data from different places. So just note that in addition to FICO and Vantage, you might also see credit scores coming from other places. For example, LexisNexis is an example of that. So why is what are we using a credit score for?
To get loans, to get credit,
Yeah.
you use credit to get credit.
Yes, exactly. What I like to help students understand is a credit score is essentially going to tell somebody else your willingness and your ability to repay on your loans and services. Okay, essentially, how good are you at keeping a commitment? Okay, we do put in here, it's used to determine credit worthiness, and it predicts how likely you are to repay the loan. Here's what I don't like about credit scores, and we'll talk about this in just a minute as far as what's a good credit score. But I really want people to think about, a good credit score doesn't necessarily equate to a good or a bad person, right? But it really is your ability and your willingness to repay debt. Have you guys ever noticed that when you log into like Credit Karma, you get one credit score? And then maybe you log into a banking app and you see something different? Does anybody panic when they see that? No? There are a couple people that I talked to. This actually happened to my former spouse. He was in the process of refinancing his house. And he's like, I don't understand, Cass, because I looked at this website and it told me this was my credit score. But when I look over here, it's 40 points less. And he's like, why does that happen? Well, it's a pretty easy explanation, and you guys might get the same question in your classroom. Like I said, there are the different scoring models. So think of these as the brands, right? You've got FICO, you have Vantage, and then you have these proprietary credit models. In addition to this, some of them have different versions. So for example, FICO has 16. They don't use all 16. They have a handful that they use more regularly than others. But they do have 16 different versions. Vantage score, remember I told you that one is the newer one? They have 4 versions, okay? And 2 of their versions are a little wonky. They're like, the typical credit score ranges from, 300 up to 850. And some of their versions are like 500 and 900. That's kind of strange, right? So, once upon a time I worked for a credit card company and I was looking at people's applications and their credit reports, and, we'd have to decline somebody for whatever reason, and they would get mad and they'd be like, well, I have an 897 credit score. And I'm like, huh? What? No, you don't. and actually they may have seen that somewhere. They may have seen that on an old Vantage score, which of course has a different meaning than it would on FICO, because an 899 on FICO doesn't exist. So here's kind of how we demonstrate. Did you have a question?
Well, so is FICO pretty reliable then? If you see like a FICO, if that is, sorry, I think.
Oh, no, that's
what were they
fine.
looking at that wasn't accurate?
So they were looking at a Vantage score that was like a 1 or 2, version 1 or 2. Every credit score is going to read a little bit differently. Yeah. So you're probably, if you think about the FICO, for example, remember I said there are like 16 different versions, but we only use a handful of them accurately. Each of these has a different focus. So for example, version 2, this really encompasses all of their credit history and kind of weights everything equally. But if we look at like a version 9, there's more emphasis on the behavior with bank cards. So think about like your if you have a Mountain America Visa as an example, or if you have even some of your store cards that you're using and paying off, that is going to have more weight than maybe your behavior with an installment loan. Kind of interesting, right? And so creditors will use these for different things. Same thing with Vantage. Like I said, that one is kind of wonky because there were the first two versions. They started out with this score, and they quickly realized it wasn't going to be adopted until they assimilated with what FICO had. And so when they did that, we started to see more companies adopting it. And then, like I said, there are proprietary credit scores. So we've talked about these different factors that can mess with your credit score, but there's one more that I got to tell you about. And it is the 3 credit reporting agencies. Did you guys know that it's not required for a creditor to report to all 3 credit bureaus? Yeah, that's kind of an interesting thing. In fact, a creditor doesn't have to report to a credit bureau at all, but if they do, they have to report it completely and accurately. Those are the rules, okay? So what we find is we're looking through credit reports, we might be looking at an Equifax and we may see, 3 or 4 accounts on there. But then if we look at Experian, there might be 7 or 8 because 3 or 4 of them didn't report onto their Equifax credit report. So you can see why we start to see changes between the credit score, right? Now, which one do you think is the most accurate credit score? We can look right here. There's some examples of where you've got, here's your financial institutions. Mountain America, we use Experian version 2, 740. We've got Explorer Bank using TransUnion version 8 at 722 credit score. Town Credit Union, maybe they're a smaller credit union, so they're using the old Vantage score, and it's performing well for them, 794. And then in this one, they're using a 701. Let's say that I am looking to borrow money from Mountain America. Which one is going to be the most important or the correct credit score?
For Mountain America, it's Experian.
Yeah. Whatever Mountain America is using, right? And I get that question all the time, even from adults. Well, what's the best credit score? Or between my Credit Karma and my Experian, which one's correct? It's whatever the lender's using to make the decision.
Do you think most bankers at Mountain America know that Mountain America favors credit union, or is this just an example for this slide?
They should know, generally speaking, we use Experian version 2. Holly, do you know, are there any instances where we might use another credit report? For example, if nothing comes up on Experian, would we pull something different? No? Okay. This is Holly, guys. She works with me. She's got some experience in the branches, and that's why I asked her that question.
Yeah, so
With
mortgages may check all 3 and
They
do
they average it.
Okay.
for the mortgage.
Do
So,
you think most credit unions like Experian more than the others?
truth be told, I don't know.
Well, here's the thing, Tim, it used to be that it was done by where it was located
Huh.
in the United States.
Regional.
So the East
Wherever
Coast
they could
was
get it faster.
TransUnion. We were Experian and Equifax was kind of
In the
between
middle.
them. And so until it became like computerized.
Digitized.
like it is now,
Yeah.
all the and because we're on the West, the majority of people still use Experian on the West.
Yeah. Oh, great question. I love that. Thank you for giving that insight. I didn't know that. That's really cool. Any questions before we go on and talk about credit score ranges? Okay. So we know the majority of credit scores range from 300 to 850. That's probably not new information, but sometimes people get kind of hung up on, what is a good credit score. Generally speaking, we break it down like this so that people can see how it impacts them when they have these credit scores and how to get there. So given a grade or an 800, and since I've got some experienced folks in the room, what do you think it takes to get to a greater than 800 credit score?
Time, paying your bills, utilization,
Variety of accounts.
just
It really is like it's simple, not easy, right? I like to tie it back to 3 behaviors because again, that's what people remember. Use your credit, pay your bills on time, do it for a long time, right? So be responsible, pay on time, do it for a long time. But yeah, exceptional credit scores. So remember the top range is 850. I think the highest I've ever seen is an 840, 842 maybe. I used to look at a lot of credit reports back in the day, like circa 2010, when I first started in my career. And I tell people like finding that 850 is like finding a unicorn like just outside your window. It's it's possible, but like it's going to be very rare if you do see an 850. So our goal is just to try and get in that greater than 800 range. And it goes back to those behaviors that you mentioned. Now with older, like those, the high school kids, you know, explaining the benefits of the credit, having a higher credit. You know, we are in a time when we've enjoyed really, really low interest rates, and all of a sudden, whew, things have gone up. And I know in the big span of things, it's not super high, but it feels really high for a lot of us. And so kind of helping them understand, you know, the higher your credit score is, the less it's going to cost to borrow money, I think is a really important thing to help them understand. Okay. 740 to 799, this is a very good range. Generally, folks in this range are demonstrating a lot of those exceptional behaviors. Maybe it's factors like time, or maybe they have a higher balance to credit limit that impacts, or maybe they have a lot of new accounts. There's different things that can factor into this. These guys also enjoy, you know, generally pretty low interest rates. They have a pretty easy time getting loans, so long as their income can kind of back up their application. In the good range, we tell people, like, this is where you want to start. Okay, if you're starting here and working your way up, you're doing a great job. So with these guys, oftentimes it's newer accounts, or it's high balances in comparison to credit limits, maybe a missed payment that can throw things off. In the fair range, usually there's something that's happened here. Okay, it could be something like they've consistently carried high balances in comparison to their credit limit over time. It might be that they've had some late or missed payments. It could just be that they have a ton of new accounts or lots of inquiries on their credit report. Here's the interesting thing about credit, you guys, is it's all relative. So I've had people ask me, well, what about inquiries? If I go and get a bunch of inquiries all at one time, is that going to negatively impact my credit score? Well, it depends. What else is on your credit score? If you've got a lot of history reporting, it's hard to say exactly how that might look. If you're consistent with your inquiries, you know, over the span of 2 years, maybe 5, it's like boom, boom, boom. Okay, and then we stop for a little while. Maybe it's not going to have as much impact. So it's hard to say exactly. In the fair and poor range, though, this is where folks tend to have a harder time getting access to credit. Generally, the interest rates are much higher. They may require a cosigner, or they may not be able to get the loan at all. Do you have questions on these? Okay. With a high school audience, generally I like to just cruise through these, because for them, again, it's like if they're 18, they might start to see that as they start to build their credit. But for many, they don't quite connect.
So I have a quick question for you.
Yeah.
High school kid turns 18, gets a credit card, starts to use it well for several months. Where on that, or when the credit score is generated, where about are they going to start?
It's obviously dependent on their use.
Right.
So if they're using it, paying it off, using it, paying it off, like that's what we want them to do,
Right.
I would say they're going to end up somewhere in here.
Okay.
If they're using it, carrying a balance, maybe making just their minimum payments, this is probably where they're going to start. Maybe on the high end of this. That's a great question.
How much time do they have to have?
I think it's 6 months.
6 months?
It's 6 months.
Yeah, no, and that's no problem. So the way that I explain that to students and folks who don't have a lot of experience with credit is, remember, your credit score is you demonstrating your ability and willingness to pay. And so we can't just generate a score 1 or 2 months after. We need to see that you are doing this consistently over time. Does that help with that explanation? Yeah. I've heard 3 to 6 months. Truth be told, I haven't followed it closely enough to say exactly.
4 to 6 is usually the average, and after 6, it goes up actually really quick. If you've been paying it consistently,
Okay.
they'll move up into that higher one
Yeah.
a little faster.
Interesting. So let's talk next about who can view your credit. Okay. Now, for many of us, this is going to be obvious, but some of these things might throw students off. So I ask them, like, what are the things that surprise you here? They're usually not surprised by lenders. In terms of landlords, okay, well, you know, why might a landlord look at it? And I like to ask them, why would a landlord want to look at your credit history? What are we doing? Well, we're making an agreement to rent. So what do you think they care about your credit? Well, it's because, you know, they want to see that you can be responsible with their property, that you're going to pay the bill. So we explain that. Potential employers is one that surprises people a lot. Do you know why potential employers might look at your credit report?
Shows your responsibility.
It can, yeah. Me, as an individual who works at a financial institution, they pulled a copy of my credit report. It has a lot to do with the fact that I work closely with members who have money and they don't want to compromise the security of the membership as well as the credit union, right? And so we have a reputation to uphold and things like that. They don't want to put somebody in who could potentially damage that.
Question.
Yeah.
If your employer pulls your credit report, is that a hard or a soft inquiry?
I have heard hard because you have to give your permission to pull the copy of the credit report, but I don't know for sure. You do have to give permission. So this is one thing that's important to note about credit. And a common assumption that kids have is like, oh, anybody can look at my credit report. That's not the case, right? They have to have permissible purpose, which means there's a legitimate business reason. And then they also have to, in the case of a hard inquiry, they have to get your permission to pull a copy of your credit report. Yeah. As far as whether it's hard or soft, that may be dependent on what it is. I don't know for sure. It's a great question. And then, of course, we talk about insurance companies. Insurance companies, they are looking at that factor with responsibility. But you also have to think about the way that insurance companies work, right? Their job is to cover you if you're in an accident or you need something, monetary from them. So if you have this relationship with your insurance company and you wreck your car, you're going to pay your $500 deductible and then shutting down your insurance right after that. They may not be like, that may not be a great business decision for them. So they may choose to offset that with your premiums. So that could be a possibility. They're also, like I said, looking for responsibility. Most people pay on, either the semi-monthly or the semi-annually or the monthly basis. So if you're going to extend that service, let's make sure that they're good for it. Okay? And then you. I love to explain the history of this because once upon a time, I remember I turned 18 in 2006 and we didn't know jack about our credit scores. It was like hope for the best. In fact, I had somebody tell me once, oh yeah, you just go put a balance on your credit card, make minimum payments, you'll be fine. You guys know that was terrible advice. Terrible advice. He meant well. And so now the fact that we have access not only to our credit report where we can see as things are happening, we have the ability to view that almost instantaneously. I got an REI card recently because I've been spending a lot of time outdoors and I want the perks. And I'm not joking you, I submitted my application and within seconds I had an email from Credit Karma. Hey, you got an inquiry on your credit report. I'm like, yeah, I know, buddy. I just got my REI card. And so that's kind of something that we like to share with students is like, this is kind of a privilege, like living in the time that you do, because we used to not know how to manipulate our credit score and make sure that it was in a positive direction. In fact, you could only get your credit score if you applied for a loan. And even then it was kind of like, good luck. So let's talk now about why is it important? Again, for students, helping them understand things like, well, this is important because it impacts your ability to get credit. It affects your cost of borrowing money. In the context of houses, 0.25% can save you $100, like hundreds of dollars a month, depending on the size of your loan. Lower insurance rates, as well as security deposits. So with security deposits, we talk about, students who are maybe going out and getting their first phone. They go out and they may have to put a little bit of a deposit, a couple $100s down. After they pay for a certain amount of time, then they don't have to pay that deposit anymore. They get it back because they've demonstrated positive payment history. So this is how that might affect them as soon as they're, 18. You might find that. Questions on any of this before we go? Okay. Well, next we're going to talk about the components of the credit report. Out of curiosity, where do you tell your students to go to get their copy of their credit report? Okay. We like annualcreditreport.com. That's the one that's supported through the federal government. So everybody is entitled to one free copy of their credit report from 3 of the major credit bureaus every single year.
I tell my students to do it every 4 months.
Yeah.
Because then you constantly.
Absolutely.
See what's happening. You just get one in February and one 4 months later and one 4 months
Yeah, you can do that. Again, the only disadvantage of that is if you have information reporting on one credit report that doesn't report on the other, that can be a little bit tricky. But for the most part, I think that's a good strategy. And so I heard Credit Karma is another place. I don't mind Credit Karma. I actually think it's pretty helpful. I like the tips and tricks that they give as well. I think that's really resourceful. Yeah, you can go a few places to get it. One of the things that we want to communicate with students is that you don't have to buy your credit score, right? And some people have that, I don't even know if they still market it. I haven't looked at it in a minute, but you'd go and get your copy of your credit report from Experian and they're like, hey, for $7.99, we'll give you your score. And you're like, okay, cool. Like, I don't really need that, but some people feel like they do. You can get credit scores from the different apps that you use. So like if you have like our Mountain America app, we have a credit score within it, but a lot of financial institutions are doing that. And so that might even be, as you're talking about, getting a bank account with your students, you might want to communicate that to them. What are some of the advantages and disadvantages of each of these financial institutions? Maybe, an activity is go and research these different financial institutions and compare and contrast as like a means of application. Because a lot of kids, they just default to what their parents are doing, right? And I've actually talked to college students who are like, yeah, I'm with this bank because my mom and dad set me up, but they don't have what they need in order to set themselves up for success. Like, it's just not something that's structured for them. And we end up bringing them over and we get them set up and they do great with the structure that we help them build. So that might be something to kind of think about.
Sorry.
Yeah.
Could you share, because I have a hard time explaining, I don't always know that answer to students on what things, without doing a lot of research on my end, I don't know what they're missing out on some of those other banks that they're getting at different banks or credit unions or et cetera. Could you share some of those things you see people missing? You don't have to give us a bank in particular.
No, for sure. I will happily talk about Mountain America. Yeah. So one of the classes that we teach is about budgeting, and a lot of people struggle with budgeting because they might put it out on like a piece of paper or create a spreadsheet, but the execution of it is a little bit challenging to follow through with. So that was me. Like 5 years ago, I was like, good luck. And if I overspend, the future cast problem, I'll deal with that later. And what I found is none of the money that I wanted to go towards goals would ever go there. Like, I'd build up my savings, something would come up and I'd use it for that. And I could never get to like, ooh, this vacation or ooh, this whatever. And so setting up secondary savings accounts and putting names on them kind of helped create this system for me where it's really effortless. I get paid every other Thursday. My money moves into these savings accounts on, mine it's like Friday, and then I have one more that comes out on a Sunday. It's weird. But then I'm ready to go. I know exactly how much I have in those accounts, and that's where I spend from. So I run around with like a Visa. That's me personally, but you could do it with a debit card where every week I spent this, and this. Now I'm moving it over from that savings account, or I'm going to spend this. I'm going to move it over from here.
You can do that. They also have My Express checking account.
Yes.
So it's almost like the invoice system. It's the best thing in the world. I do carry around 9 different debit cards.
Yeah.
But I have a certain amount that goes in each month. It's called My Express, and you just go into your branch at Mountain America and you just say, I want to set up these accounts.
You can do them from your app too.
And
Is it just a Mountain America thing?
Some other financial institutions offer them. And that's the thing is, this is where it pays to take the time and have them like shop and, what are the features you think you would need, and being able to explain some of those things. Do they have automatic transfers? Do they have notifications so that if you spend a certain amount, hey, just to let you know, you spent this much, that can help with fraud prevention as an example.
fees. It's
Fees
nice
is another
for them
one.
To be able to see the difference.
Yep.
Like Mountain America doesn't charge fees on their accounts, and then you can go to a bank and there's a $3.50 charge
Like a minimum.
every month.
Yep.
Well, if you don't keep a certain amount in, and most of these kids won't have that certain amount, it's even higher than that.
Yeah.
So it's nice for them to be able to see and compare and say, oh, wow, this is a better fit for me.
Yep.
Because of X, Y, Z.
And even things like savings rates. So, if they're looking at doing a mid or a long-term goal, so something like 6 to 12 months out or further, having them compare certificate accounts as an example. would be really beneficial because oftentimes, not always, you're going to find like you will find generally higher dividend rates with credit unions compared to banks. Not always. A lot of banks now, they have the high yield savings. So helping them kind of understand what are the terms of those. A lot of people think money markets are awesome. I have a bias against money markets, not because they're bad, but usually my savings goals aren't like tens of thousands of dollars, and that's really where you start to make the higher yields on savings, right? I generally try to, stack certificates because I get the guaranteed dividend for that amount. And then, at the end of the year, if I still want that money there, I can roll it back over and do it again. But if I don't, I can take it out and spend it on whatever I want.
And they have really good rates, and you can go to their website, and there's actually
You can compare.
accounts and go to rates, and you can see all of the things that they offer with the rates.
Yeah.
And then you can do that with like Chase Bank, and you can put them up side by side and actually see the difference and see why credit unions give more to their members and things like that.
Yeah.
It's pretty cool, and the kids really enjoy it. Oh, I'm with Chase. Oh, I'm with MacU.
Yeah.
All right, let's compare these CDs. Oh, I can get a 6-month CD right now, and I don't remember what it is, but it was pretty significant. And
Yeah.
the kids were all like, oh, wow, that's a good deal.
So
So they can see the difference.
another thing that we do is we do something called a growth certificate. So you're basically making an agreement with Mountain America to keep your money in for a certain amount of time. But most traditional certificates, you have to have a set amount, like $500 to start. With that growth certificate, I think it's $5, and then you do $10 contributions every single month. And that's how you keep it active and growing. So for these kids that don't really have a lot to start with, it's a way for them to gradually build up their savings over time. So when we're talking about, going back to your original question, things that some financial institutions may not have that others do, it's the things like the named savings accounts, it's the options like growth certificates, and Mountain America is awesome. There are a lot of great financial institutions out there, and everybody's going to have something different, and that's why it's valuable to go and shop and just help these students figure out like what's going to be best for them. Because I'll plug Mountain America all day long, but I will not I'm not going to sit here and push products at you guys one way or another, because that's not my job. My job is to educate the community and help the kids understand what they need to be successful. So, sorry, I get kind of heated about that. We live in the marketing team, ironically, and I'm like, I don't do marketing. Let's talk, going back to the credit report. So in this section, we break down what they can expect to see on the credit report. With some of the questions that I get in classrooms are like, well, I'm 17. Should I pull a copy of my credit report? Is there going to be anything on it? If they can pull a copy of their credit report. If there's nothing on it, or they get an error saying that it's not coming back, that's a good thing. We don't want information to come back on a credit report for somebody who's under 18, because either, number one, that somebody has used their credit, probably maliciously. In some cases, they might be listed as an authorized buyer on a parent's credit card. Either so that they have a card that they can run around with and it's not using mom or dad's card. If that account is used responsibly, it may positively impact the child's credit score. So I don't ever give that advice, because I don't know how parents are with their credit. But it is something that some parents do as a strategy to help set up their kids with good credit scores. So when we talk about credit information, we're just really encouraging them, look at your stuff and make sure it's accurate. When you're looking at addresses, make sure you recognize all of the addresses that go in there, because this information comes from applications that you are submitting. Sometimes we'll see people with common names. We tell them, just when you're looking at your name, validate that your social security is there and not anybody else's. And then same thing, date of birth. Sometimes there can be typos, or, you'll see, John J. Smith Sr.'s information on John J. Smith's Jr. information. It gets kind of convoluted. And then I tell them, if there's anything wrong, you have a dispute button. Remember the Staples Easy button? We've got the Credit Bureau dispute button, which makes it really easy to help correct some of this information. We go through employment history. Sometimes on credit reports this is here, sometimes it's very thin. Again, this comes from your application. public records. So you guys know now, the things that come up on public records, it used to be like liens and judgments and stuff like that. They don't put that on there anymore, just bankruptcies,
No liens, no court judgments, nothing.
just bankruptcies.
Just bankruptcies,
Yep. And then how long do bankruptcies stay on credit reports?
7 to 10, depending on which kind.
7 to 10 years. So when we're talking to students, it's helpful to, pay like, hey, if you have a goal to buy your house, you turn 18, you get into a lot of debt by 19. This actually happened to my little brother. I got the financially savvy genes, I guess. And he filed bankruptcy just before he turned 20. He still can't buy a house. He's still having a hard time getting that. Okay, so help them recognize like it may seem like the easy way out, but this actually has long-term consequences that can affect your family, especially when you're 18. That's 5 years is 23. A lot can happen in that time. And then in this section, we break down the trade lines. So again, with students, because they may not have the ability to relate to the content as much, I don't spend a ton of time here. What I really emphasize on is just, hey, we talked about credit score, your ability and willingness to repay your debt. Check it out here. This guy, he's making more than his minimum payment. That's awesome. That's what we want to see. We also want to see that we've got good payment history all along, okay? Some other factors that go into your credit score are things like how long your account has been open. There is a common misconception that if you're not going to use a credit card, you should close it. Have you guys heard that before?
Good.
Don't. Why don't I want to close it?
Credit length impacts your credit score, but also when you close a line, it brings your score.
Yeah.
And you also lost some of your credit utilization ability.
Yeah, it affects your credit utilization. So it's the reporting. They're not going to be reporting that you have a good relationship with them anymore. It's the amount of credit that's available versus what's being used versus what's available. And so yeah, there are some things like this that you want to keep in mind. But that's really what I emphasize with them. Now at this point, sometimes I get questions about like, okay, so what if I get a credit card, it has a $500 limit and I want to put all my purchases on it? If I'm using it and paying it off to zero and using it and paying it off to zero, is that going to look bad on my credit? In other words, do I need to go into debt in order to establish my credit score? What do you think the answer is? You don't, right? Because you can use it, pay it off. When we report to the credit bureaus, we're going to say, hey, so-and-so, they paid $2,000 on their credit card. They have a credit limit of $500. Their balance is zero. That's awesome. That's exactly what we want them to do, okay? And then we get to talk about inquiries. So the biggest thing I point out here is there's hard inquiries, soft inquiries. Hard inquiries do negatively impact your credit score if you have a lot of them all at once. The further, the more time between them, the less impact they're going to have. Obviously, the more history you build up, that helps offset some of it too. With soft inquiries, these do not impact your credit score. Oh, I should add, you have to have permission. You have to give permission to pull these. But with soft inquiries, with these, you really have no control. There is a little bit of control. You can do an opt-out pre-screen, and I'll give you guys the website at the end. That's something you might be able to do. But for the most part, it's kind of out of your hands. So when we're talking about soft inquiries, basically the way that happens is your information is stored in a database. A financial institution or a vendor, insurance company, whatever, they're going to go to database and say, hey, we need people within a certain demographic. I want, folks who live in the Intermountain West between the ages of 25 and 65 with a credit score of 740 to 820. And vendor or the database is like, yeah, sure, here you go. Boom. They send it back to that financial institution. Financial institution prints the marketing materials, and then they end up in your mailbox. So you can do an opt-out. You do have to redo it after, I can't remember if it's 2 or 5 years, but you do have to redo the opt-out. It's free to do the opt-out, but just know it takes about 6 weeks for that whole thing to, start to finish to happen. So you may still get some mail in between. And then this, 3 factors that have the most influence on your credit score. Payment history, debts owed, length of credit history. You guys already know this because you just told me a few minutes ago, okay? We choose to do 3 instead of the big pie chart because, cognitive load is a thing. We don't want to overwhelm the brains. Okay, and then we talk about how time impacts the credit score. So activities within the past 2 years are going to be the ones that have the most weight. Negative events stay on there for 7 to 10 years. And then I like to say it, I've said it before, to have a good credit score, you got to budget, you got to pay your bills on time, do it for a long time. Okay. All right, let's talk quickly through credit risk because we're running out of time. So I talk a lot about co-signing. Like, it's one of those things, especially as kids, it's important for them to recognize what their parents are doing for them when they agree to co-sign on a loan, right? And if we are, if a parent is co-signing, they're basically saying, if you bail on this, they're going to pay the debt. And so I tell them, when it comes to your opportunity to go co-sign for somebody, don't do it unless you're willing to die for that person. And even if you're willing to die for that person, make sure you have a plan to get out of it so you're not stuck with it forever and it doesn't jeopardize your financial situation. We don't want things like unpaid items like medical collections, unpaid bills, maybe it's utility bills as an example, a cell phone bill, that can report negatively on the credit report. Avoid maxed out credit accounts. And then we talk a little bit about cash advances. Cash advances are expensive. You guys know what I'm talking about when you go to an ATM, you take out cash. That's different from doing cash out at the register. Do you guys know how that's different? Or why it's different?
Well, if you're at an ATM and you're doing cash advance, you're using your debit card. If you're at the register and you're doing cash advance, that sounds like a credit card.
So you can actually take your credit card to an ATM and withdraw cash off of it.
But that's the difference between the two types of cash advances.
Yep.
If you're using credit, it's going to cost you a lot more if it's just coming out of your debit card, that's out of your account, that's just cash that you already have.
You're right, but here's what's interesting. So you can take your credit card to a point of sale machine and you can run it and say, hey, I need $40 cash out. It shows up as a purchase. So a purchase is different from a cash advance. Purchases, we have that nice grace period, where we're not accruing any interest. But then if we go to an ATM, we start accruing interest that same day. And the interest rate's actually much higher in most cases. Yes. Yeah.
But from the register, do they have fees? I can't remember, and I don't remember the last time I did it.
Generally at a register, it's tacked on to your purchase amount.
Well,
So if you're at Walmart, you spend $20 and you want $40 out, it's counted as a purchase. Now, I'm just telling you guys that inside information. Please don't share that with your students because then your students are going to take advantage of it. We really don't want them taking cash out on their credit cards. Some warning signs. So this is kind of like the heavy part, right? It is possible for people to get in over their head and they can become overwhelmed. So we want to just help them recognize, if you can't make more than your minimum payment, that's probably a sign that you're financially stretched and you might need to talk with somebody to get some help, whether that's refinancing into an installment loan if it's a credit card or working with somebody to, figure out your budget. Things like that. If you don't know how much you owe or you're getting collection calls, those are definite signs that it's time to talk with somebody, particularly your creditors. Don't be afraid to call your creditors and explain your situation. They want their money back. They will work with you to help make that happen. Some things that we tell people to avoid: credit repair clinics. Everything a credit repair clinic can do, you can do yourself with just a few hours of time, maybe not even a few hours, maybe an hour and a half. And here's the thing, you're not going to pay a dime for it. With the credit repair clinics, they're going to charge you money. Because of the FCRA, the Fair Credit Reporting Act, that one, they are actually obligated to remove anything that you're disputing and while it's being investigated. As soon as it's investigated and it's validated, boom, it goes right back on. So that's why we tell people to avoid those. High interest debt consolidation. Again, with a debt consolidation, your goal is to pay less interest, accelerate your debt payment plan. Of rent-to-own, payday loans, like you guys can Google some examples of these or even look at the like the Rent-A-Centers and things like that to see and just kind of show them like the cost to buy this item on sale versus the cost of buying it at a place like a rent-to-own or even doing the rent-to-own contract. Some of them are like massive difference, thousands of dollars difference. So that's something that we want them to know. And some of these kids, you have to remember, they come from families where things like this is normal. And so helping them address, like recognizing this is a problematic behavior and we want you to avoid it is a really important thing to call out.
And it's interesting that, like in St. George, the average payday loan interest rate is 350%.
Mm-hmm.
And so when you show a student 350%.
Percent. Yeah.
They go, oh,
Yes.
that's a lot.
Yeah.
But they don't call it an interest rate or an APR, they call it a fee.
Yeah, absolutely. So as far as maintaining your credit, it's really about looking at your credit report, making sure everything is reporting correctly. If it's not, getting that disputed and getting it resolved. Again, use your accounts responsibly, pay your bills on time, do it for a long time. As far as restoration of credit, we talk a lot about automation. Like automation, in my opinion, is like the queen bee when it comes to budgeting and money, because you don't have to think about it. You don't have to feel any emotions. We do a presentation on money in the brain, by the way, which is really fun, where we talk about how our emotions affect our financial decisions. And then you can see we also offer, some resources. As far as rights as consumers, so a lot of people don't know this, and prior to like 2010, we really didn't have some of these things in place. So like if you're denied for a loan, the financial institution has to tell you why you were denied. They have to tell you which copy of the credit report was used, provide your credit score, and the opportunity to get that copy of your credit report. Kind of nice, right? They have to mail that to you within 30 days of the decision. Here's some things collectors cannot do. Now, when I started working for the credit card company, I watched this documentary and people were like so overwhelmed and so emotional about the way that collection agencies were treating people. And I was like, oh my gosh, I'm working for the bad guy. I was not, but a lot of reform has gone into place over, the last 15 years. To help make it a safer place for folks who owe money. So collectors can't threaten violence, they can't use profane language, they can't publicly shame you, they can't try and collect on debt that isn't yours, they can't make threats to have you arrested. They cannot call within certain hours, they can only talk to you once a week. So that's kind of nice. If you have somebody calling you and you say, hey, I don't want you to call me at this phone number, they actually can't call you there anymore. So that's also something that's nice. Okay, so I promised you guys some resources. Here's kind of some of the things that we talk about. So when we talk about collectors and if they are out of line or not behaving appropriately, that's something that you can refer to Federal Trade Commission. You can actually submit reports. Scams too. If you or your students are exposed to scams, you can report that over to the Federal Trade Commission and they get to investigate those. So that's kind of an interesting thing too. As far as resources, if you have questions about protections, credit scores, look at the cfpb.org, .org. Maybe it's gov. I might be messing that up. I can validate it for you before we leave. I think it's gov.
Federal Trade?
No, CFPB.
I think it's gov.
Okay. Yes. Hashtag Google. Remember I told you guys can opt out of those pre-screen letters. This is how you do that through optoutprescreen.com. It's free to submit your information and it takes about 6 weeks. Annual credit report is one that we talk to. And then of course, we have tons of resources on macu.com/guide, like tons of resources. We have podcasts, we have blogs, we have interactive worksheets, things like that. And then of course, some of those things we're happy to bring into your classroom as well. Before we go, I just want to take a moment to plug that. So we have lots of different things going on. We have things like insurance basics and tax basics to help students understand why they might need those things. We do Everyday Financial Success, which is our budgeting workshop. But we actually go into some of the behavioral finance aspect of that. So it's not just like, here's your budget, have fun. It's like, let's talk about why it's hard to stick to a budget and how we overcome some of those challenges. And how do we maintain the motivation? So I just want to, put a plug out for those because I feel like as students, especially where they don't have a lot of financial responsibility in most cases, at this age, it's a really great opportunity for them to begin practicing. And if they make small errors, it's not going to be catastrophic and ruin their life like it would for many of us in our age. So yeah. Again, we are out at the table. If you have any questions, please come over and talk with us. We'd love to, talk some more.
CFPB.gov.
CFPB.gov. Thanks, guys.
Thank you.
Yeah, thank you. Have a great rest of your day.